Man, we had another interesting week in the market this week. Market pushed up to fill the gap we were watching from last week. It filled the gap, then it closed right at the top section of that gap. We're going to take a look at that on the chart here in a second. I'm the Wall Street Yardie, and this is the weekly market report designed to get you ready for the upcoming week of trading, what to watch for, and how we might be able to play it. As always, we'll touch a little on the macro, talk about which earnings and news might cause us to move this week, and then I'm going to give you my read on the trend and the levels that could trigger a larger move this week in the market. So let's jump right on in. Big news we were watching this week was the jobs report that came out on Thursday. The report was a good one, with unemployment dropping by 0.1% and the economy adding 57,000 jobs. Hiring is doing okay in the market, although we're still fighting inflation, but the good job numbers gives the Fed job a little bit easier. We were up most of the week this week in SPY, as we'll see on the chart in a bit, but Thursday we took a big hit in the chips, and specifically the memory names like Micron and SanDisk, because SK Hynix out of Korea announced that they're adding capacity to come online late next year, and this is going to ease the memory shortage that we're seeing with Micron and SanDisk. So this will probably add a little bit of oversupply, and thus the premium that we've been paying right now for AI memory might come down quite a bit. So the margins for these companies are going to shrink, which is why you saw the stocks drop so much. We're also seeing a little rotation out of these big movers and into the software a little bit. So Palantir CEO Alex Karp was on CNBC on Wednesday, and what a lot of people are calling a crash out, but I thought he was just telling the truth. And he said that without an application layer, these AI models that are coming out of Anthropic and OpenAI are going to be very, very hard to trust. Companies are not trusting them. They're getting really frustrated with the integration and being able to secure their data and their business using these models. So he feels that, having something like Palantir or Microsoft sitting on top as an application layer that could put the guardrails and protect their data, protect their business, and allow them to switch models out underneath is going to be the key to AI adoption. So Microsoft and Palantir were both up 12 and 25% respectively this week on that news. So we're going to continue to pay attention to them as we see some of the rotation go out of the hardware and the chips for AI and into the software. So with that said, let's jump on the charts and see where we might be headed this week. All right, switching over to the charts now. We're looking at the SPY daily candlestick chart here with our levels already marked up. We'll go ahead and turn off the moving averages for a second here. Last week I was telling you about how we need to pay attention to the lower highs and the lower lows that we're forming here, which actually indicate that we are shifting the trend from bullish to bearish. As you can see from back, early April, we had this huge run up. It was kind of straight up. Markets don't tend to work that way for very long. And what we're seeing now is that once we made this all-time high, we created a lower low here. And then the next high after that was actually lower than that. And then we went ahead and had this crazy doji candle last week, Friday. That's what I was telling you about last week on the market report. And then the close on Thursday, since we had the short trading week, was another doji candle, 2 dojis in a row. Even though we had really good jobs news, you would expect the market to kind of like that and try to push a little higher. We did make a higher high, although we had a lower low. So this is even more sideways action. And I'm going to show you in a second what we really need to be paying attention to here. As you can see, my little blue arrow from last week, this is where we were watching for a pivot down. We did not get the pivot. I believe, if we had a Friday trading day, we probably would have gotten the pivot on Friday. But we'll see what happens here on Monday and see if that actually happens. If so, then I might still consider putting on my bearish credit spread, which I shared with you last week on how we set that up. So if you want to see that, go and watch last week's weekly market report. You'll see what we have going on there for the bearish credit spread. We'll be selling a call spread somewhere up above if we do get that pivot to the downside. And the reason for that is we would then have one high here and then 2 lower highs right consecutively behind it, which is kind of bearish, especially with the 2 lower lows with going in conjunction with that as well. So go take a look at last week's market report if you're interested in that trade. But we're going to continue to wait to see if we get that pivot or not. But for now, what we're going to pay attention to is what levels we're headed to. Now, we filled this gap that we had here at 743, and we're now looking to possibly come to the downside. Now, we can always go up from here, right? But the thing I'm watching is, if you notice on all 3 of these, or these 2 pivots down, volume was increasing each time, right? So every time we kind of got up to a new little high here, even though it was a lower high, and it turned around, volume picked up. So that's very bearish for me. And we're doing it again, right? So we had the short trading week, but this little doji candle here is also on higher volume. So if we get a Monday that we have a much lower low and lower high, I'm going to be inclined to take that bearish credit spread. I'm going to also be inclined to possibly look on and put on some puts to the downside, coming down to back to 725, which will be our next level down, and watching for that. And if we break that, then of course we've been calling for 700 for a while now, and the market's taking its time to get there if it's going to get there. To the upside, we're going to still sit with this 766, 765 level. This is a Fibonacci extension we had here up at this level. So we're not going to see that unless we break the high that we have here. That is 756, 757. We need to close above that before we can even start thinking about hitting up to 765. So that's what we're watching. But here's the structure that you really want to pay attention to, is that we actually have a triangle forming. And if I connect the trend line here, and I'm going to go ahead and see if we can hide our little triangle there. All right, so let's clean some stuff up for us. And then I'm going to add another trend line here at the top and connect these dots. And look at that. We get a nice triangle pattern forming here on this. So when we get triangle patterns forming like this, this is also another sign that we are in a sideways move, and the market is trying to decide which way it's going to break. Now, if we break to the upside and break this trend line, close above this trend line, then you can expect more upside, right? So that will be an early signal before we get higher than this high here. And then to the downside, if we break this trend line to the downside, I'm not going to count this candle because, as I said last week, this candle, there was a 4-cent difference in the body. There was complete indecision here. So we're going to kind of throw that one out a little bit. But if we do break the trend to the downside here and close below this trend line, then 725 is certainly where we're headed, if not lower, right? So that's what we're looking at this week on the SPY. The QQQs are actually looking very, very similar. So if you see here, we also have that same triangle pattern to be expected, right? Because the Qs is just really technology, and technology is what's driving the market right now anyway. So there's your triangle on the Qs. We can adjust it a little bit for that. But again, there's indecision here. The difference with this one, the current candle, the last candle from Thursday, is really touching on the lower end of that, kind of indicating that maybe we push lower here, versus with the SPY, we were up on the upper end of the triangle there. So we got to watch and see which way the market goes. We've got a lot of stuff coming out here next week. Not much earnings, but we are heading into earnings season the week after. We're going to start seeing some of the banks come in. We're going to see some of the technology companies come in and report in July. So we're going to pay attention to that and see what happens going forward. All right, cool. So I'm the Wall Street Yardie. This was the weekly market report. Hope you learned something today. If you got questions, please feel free to link me in the comments. I'll catch you next week.